What's up, everyone, and welcome to another Bitcoin market update. In these videos, you will learn how to use technical analysis to forecast price movements in your favorite cryptocurrencies like Bitcoin and others. So let's dive into Bitcoin here on the monthly time frame. We got a lot to talk about today with the recent volatility. So we've been talking about this potential higher low being set on the monthly time frame for quite some time. We had this declining bear volume, and we talked about at the close from June here that it was likely that we would come up and form a higher low here, coming above this high at 41,322. So, given that this higher low, and the reason why did we think that there was going to be a higher low being, why did we anticipate a higher low being set here? The reason was because the magnitude of this move from this low to this high. So this low in September was at about 9,800, and this high was at about 65K. So it's a pretty significant move. And so because of that, for us to come down and break to a new lower low on the first go is not very likely. What's instead a lot more likely is that we come down and form a higher low. And that's exactly what's happening here. Is we're forming a higher low, and then we will come up to potentially form most likely a lower high. And the reason that we think a lower high will be set is because of the magnitude of this drawdown. So we drew down about 55%. So for us to go up again from this low to a new higher high, we'd have to go about 127%. So it's not impossible that that could happen, but it's unlikely in my opinion. So we'll see what we end up getting there from a monthly perspective on Bitcoin. But the areas that I'm looking for a potential, the area, I should say, the one area that I'm looking for a potential lower high to be set is right around this R2 pivot at about $46,300. So let's go to the weekly perspective here. So from a weekly time frame perspective, the resistance zone is going to be that same R2 pivot zone there, up at about 46,300. But the interesting development here is that this actually is now looking like it is confirming to be a liquidity run on stop losses. And so what I mean by that is you can see this key low right here where I have the check mark below and this one here. We're right near each other. And there's stop losses below this low and below this low because of the people that went long here. They put their stop loss below that. People that went long here, stop loss below that. So to get those people out of their positions and create sell side liquidity, so then you can, if you're a whale, buy the asset for a really cheap price, and also do it without moving the price significantly because you have large positions. And if you just buy the asset outright on an exchange, you'll likely push the price up significantly. What you have to do is you have to engineer liquidity. So you push the price down to a certain level where people's stop losses get triggered, forcing them to sell a bunch of the asset. And then you can buy a bunch of it and you can scoop that asset up that people are selling without moving the price significantly because there's a lot of sellers. And then suddenly you can get a situation like this where now people buy the dip aggressively. You get this long lower wick here. And then you get a lower high. And then you come down and you form a higher low in comparison to this low. And now what happens on this low right here is we're potentially changing the trend now. And that's because we have our higher low, and then now we're having a higher high. So it depends on where the weekly candle closes, obviously, this weekly candle as well as the next one. But for right now, we're operating far above this key high here. So it'll be interesting to see where this weekly candle closes as we still have majority of the week left, and we've already moved pretty significantly up. So it'll be interesting to see what happens there with that development. In terms of the RSI, one other interesting development here was this hidden bullish divergence. So you can see clearly here that the RSI is making a lower low. But if we look at the price action here, we're making a higher low. And if we look at this low here, we're at 44.53. You can see that based on the RSI down here. 44.53 RSI. This low, 46.28, which is you have to look at it from this candle. I'm sorry. So you see the RSI right here, 41.98. So this was a hidden bullish divergence because this low is a higher low than this one, and this low from here is above this low. So there's a discrepancy there between those lows, and they're therefore signifying bull pressure on this drawdown in price here, signifying that it's weaker than this drawdown. And you can also see that with the volume just by looking at the weekly volume. You can see we have increasing bull volume here, above average, above the moving average here that I have on the volume indicator, and then we have the declining bear volume on this drawdown. So and it's below average. So that's signifying that this drawdown is weaker than this one. And so it's not too surprising that we got this rise in price, but let's talk about why that rise in price occurred and the levels that I'm currently looking at. So the first thing that we can see here is we have had a significant rise in price over the last 4 two-day candles. So these candles, what happened over the course of these candles is what's called a short squeeze. So what a short squeeze is this is when short sellers in the market are forced to close out their positions due to the rise in price. So the rise in price is coming from whales in the market, the bulls, that are pushing the price up to force short sellers, people that want the price to go down, to close out their positions. So when the price goes up, short sellers that are betting the price is going to go down are losing money, obviously. So as the price rises more and more, they're increasingly losing more and more money. So what happens is some of them do not close out their positions and they just get liquidated on the way up, meaning their accounts, they lose all the money in their accounts because they're to cover the margin that they've taken out for their leveraged trades. And the other thing is, if they're not getting liquidated, they're getting stopped out of the trades or they're just closing them out manually. And that creates a lot of buy pressure because when a short seller closes their position out, they're forced to buy that asset back. And so when they buy that asset back, what happens is it creates that buy pressure. And so not only are the whales pushing the price up now, but people's stop losses and liquidations and manual closing of shorts is also putting buy pressure onto the asset's price and therefore causing the price to do what happened right here, which is a rapid rise in price. So when that happens, it's important to know why this happened. This isn't because of some fundamental event or something of that nature. This is because short sellers are getting forced out of their positions, because when the price was going down here, a lot of people were going short. And once a lot of people start to go short on an asset, if the price continues to go down, there's not that many market participants left to continue to sell that asset because they're already short. And so because they're already short, the more profitable price movement would be up, because then you get more volatility from people forced to close out their short positions. And so that's what we saw here. So that's why this rise in price occurred. But now, what are we looking for now in terms of support and resistance? Well, this level right here is the key level that I've talked about several times over the past several weeks. And this is the level right here where we had our bull trend. So we had a low, high, higher low, and then higher high. Then we pushed down through the zone, making this a resistance zone because it should have been support right here. And then once we came back into it here, resistance, and we get the rejection down. And so now this level, if we get two-day candle closes above this key level, this will end up being the area. Excuse me. This will be the key area that we'll be looking for price to potentially bounce off of. And this is our 2-day candle from June 10th. So this goes all the way from 38.5 roughly down to about 35.8. Then if we look at the daily time frame, I know I talked about this on yesterday's video, and this completely got invalidated, was the Ichimoku cloud and the pivot level here. You can see that this level right here did not hold up at all in terms of a resistance level for price. So typically when you get into a trending situation with the Ichimoku cloud, like for instance back here, you can see that when you return to the Kijun, you bounce off of it, and that's a buy zone to continue the trend. Same exact situation here. Buy zone, continue the trend. And then ultimately, this should have been sell zone, continue the trend. But, clearly the short squeeze said not today, and we got a rapid rise in price here that completely invalidated this Ichimoku cloud and daily pivot zone. So that was interesting. From a daily perspective, the other zone I'm watching besides that 2-day level, before the 2-day level zone prints, is this zone right here. And this is our same exact pattern with a low, high, higher, low, higher, high, and then we pushed right through this zone. We return to it here, rejection, 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 and now we're above it. So if we close today's candle above it and then tomorrow's candle above it, this will end up being a strong support zone for price for potential bounce in the coming days. Let's go down to the lower time frames and see what we're dealing with there. So if we look at this from an 8-hour perspective, you can see that right now people are taking some profits here. So we've had a significant rise in price here. So it makes sense why people would take profits here. This is our main resistance zone right here. This white candlestick right here is an 8-hour candlestick from our bear trend right here. So this zone is the area where price is currently running into. You can see it as this longer upper wick. Depending on where this 8-hour candle closes, we'll see if this zone ends up holding as resistance. If we close above it, the next 2 8-hour candles above it without rejecting off it once, this will end up turning into a support zone for price. But at this point, it's looking more like it's not going to do that because of this longer upper wick and running into this additional yellow resistance level up here, which is on the 4-hour time frame from back here. So this is where we had our bear trend as well. So we have a high, low, lower high, and then lower low here. So this candle right here, last area where people were buying the asset, is going to be resistance, and you can see that it's acting as resistance right now and providing this drawdown that we're currently seeing in price. So now it's a matter of where does the 8-hour candle close, and then also where does the daily candle close. Because of this gray zone, we're looking for that potential close above that zone. I think it easily could close above this today, and then tomorrow is going to be the day where it's really going to be a test for the bulls to see if they can close above that daily candle again. So that's currently what I'm seeing on Bitcoin's price action right now. I hope this video was helpful for you. If you like this video, give it a like down below and subscribe for future educational content around cryptocurrencies and blockchain technology. And if you haven't already, check out our beginner technical analysis course that we released on Leutheria.com. This is where you can get unlimited access on any device to a realm of different video walkthroughs like this on TradingView, as well as different presentations where I talk through different concepts like volume analysis, candlestick analysis, trend analysis, support and resistance, and a ton of other stuff as well. So you can check that out. There's a link for that in the description below as well, and it's currently 20% off to get that course, so check that out. And the other thing that I would mention is our Telegram channel. So we have a global community full of people from around the world. We have over 13 different countries involved in that community. It's really interesting. So this community is where you can really get your questions answered by members potentially more experienced than yourself, discuss different crypto-related topics, and meet people from around the world. So if it sounds like something you might be interested in, it is free. You can also join that using the link in the description below. And that's all I got for this one, guys. So until next time, onward and upward.